Hey Trader Stephen here with TradeSplain.com. It is Friday, November the 12th. We're going to look at the market real quick, and then we're going to look at some top ETFs of the week. There's definitely some new fresh inventory creeping in the top 10, stuff that's in buy range. So let's go ahead and get started. The NASDAQ this week has needed it has a much needed pullback, right? It has pulled back maybe a couple percent, maybe a little bit more off of the high. Still hasn't quite made it to the pink line, which is the 20-day moving average, or the 50-day, and it might not come back to the 50-day. It might just kind of touch the 20-day and bounce off. So, futures are up this morning. Right now, I kind of have to just treat this as a pullback within an uptrend. Right, a pullback within an uptrend, I'm going to assume that it will hold for now just because it is the first pullback. Look at all this accumulation that has came in, and now you have a little distribution, but I mean, you have 10, 11 straight days of accumulation in the NASDAQ. I tried to go back a decade to see if I could see this, just giving it the good old eye test, and I could not replicate this in another year. So what that means, I honestly don't know. But that's a change in personality. We'll put it that way. So to me, I have to treat this as a pullback within an uptrend. Everything still looks good. Buying pullbacks here. Maybe it pulls back a little bit more. So you have the S&P 500 right here that is, looks the same, really. Nice smooth uptrend riding the green line, the 5-day moving average, and trying to pull back to the 20-day. And by the way, for full resolution, I highly recommend expanding this video and watching it full screen. That way you can really get a crystal clear picture. But right now, the overall market still looks good. I have no complaints. Let's look at the top ETFs. Let's kind of go in here and look at the top 10. You have this KWEB, this China ETF, and I bought some right here. And as it started to change its personality, right? It's been in a nasty downtrend for a long time. I bought some right here, and it went up, and then it kind of stopped me out right here. So maybe I took like a 2-3% loss on it as it broke the 50-day moving average because I didn't want to own it, as it's in the larger trading range. Oops, let me kind of clear that. So now it is coming back. It's up 10% the first 4 days of this week, but in my opinion, it's still in the larger trading range. I could call this a inverse head and shoulder pattern with a neckline. I believe it would be wise to not buy within the trading range now that it's got some crystal clear support and resistance right there. Let it break out above this level, even if you have to let it pay a little bit more, because as I noted already, it already cost me for buying within the range, even though when it broke above the 50-day moving average for the first time since February, I'm okay. That's where I'm going to swing the bat. I'm completely okay with that because it's changing personalities. Cannabis, so you got POTX is up 7.8% this week. So many failed. Cannabis is the industry has been a disappointment this year, to say the least. I made boatloads of money last year. I completely caught several major stocks that tripled and quadrupled, and I'm not mad, but I have tried to play a lot of failed reversals, and you have to understand that if you have a downtrend like this, right, most trend reversals are going to fail because you are betting against the overall trend, and the overall trend is down. However, on Monday, it really popped, and then it eased back down, and if it breaks above Monday's high, in my opinion, game on. And I would go long, and I am going long. And if it breaks above that, I'm going to, so it needs to break above. So you got this kind of 945, 930 area. If it breaks above that, I'm getting in. And we'll see if it breaks above that level today. But it's looking like it wants to pop out of here, but it's still at an area where it could easily fail. But if I want to swing the bat at a place, just like the China ETF, right? I want to swing a bat at a place that is starting to show signs of of a change in personality. Even though I'm going to have a lower win ratio, I'm going to have a lower chance of success because I'm trying to get in so close to the bottom. I'm okay with that. If you want to pay a little bit more and wait till it clears above 10 or something like that, fine. But in my opinion, it could pop, and it could pop very, very quickly. So this, to me, in my opinion, most cannabis stocks, a lot of them reported earnings this week. If they break above Monday's high, I would slap a buy rating on them. Okay. The crypto, the Bitcoin trust right here is, I mean, it is what it is, right? It's kind of really a sloppy pattern if you look at it. I haven't been swing trading. I've been swing trading Riot and doing just fine lately. I haven't been swing trading any of this. I own some long-term cryptos, and but I haven't been swing trading this just because it's a pretty ugly pattern. It's just kind of one big cup. You could call a cup with handle breakout. Either way, it's extended. I'm not getting involved here. So let's talk about miners. So RING, this usually performs better than GDX. Okay, so the bigger trend is down, right? I could draw that, and I think that's clear, right? Wherever you want to draw, it doesn't matter. However, it's looking kind of interesting down here because you have an inverse head and shoulders pattern. You have a breakout of the neckline and a breakout above the 200-day moving average. In my opinion, this is a buy right here. And again, the bigger trend is down, so we don't know if this is going to take a true trend reversal or not. But I think it's a reasonable place to swing the bat, and you could just have a super tight stop under the 200-day moving average, like 3-4%. That way, if it just keeps going, you're good. And if it decides it wants to roll back over, you're only risking about maybe 4%, kind of in that range. So, in my opinion, again, when you're in a situation in the market where a lot's extended, you're trying to look for those catch-up industries, or those industries that are starting to wake up, and because those have the most upside because they haven't made their move yet. Well, I think the cannabis is setting up where it could. We'll see. And the gold and silver miners are setting up where they could make a move. Again, this is very, very early with both industries. So you kind of have to keep that in mind, that the earlier you try to catch in close to the bottom, maybe the lower the success rate, but the higher the upside. So I like this. Yellow is also cannabis. Look, it kind of just cocked back like a hammer, like it popped. It kind of created this little flag, a breakout above Monday's high, and I think you need to go long. I think this is the place to swing the bat, whether it works or not, with the stop under this week's low, right? You're not risking a lot. If you're right, this could easily get to 20. If you're wrong, you lose, but that's what we risk. But you're not losing very much because you're not going to let it fall much below, maybe a few pennies below this week's low, right? If it falls back below, and then if it does this, and then it kind of chops around for a bit, and you got to take a stop and then buy it back as it clears that, so what, right? That's a part of trading. We're going to take some losses. We have to swing the bat at aggressive areas. Chart looks the same, even though gold miners looks better at the moment because it is already above the 200-day moving average. I tend to try to play silver more because when they're both moving, silver usually outperforms. It's the more aggressive counterpart. But to me, this looks pretty good too. This looks in buy range with just really a tight stop under here, right, under the breakout zone. Let's see, there's not really a whole lot left in the top 10 that I would just kind of slap a buy rating on, but kind of really in the top 5, you have this carbon ETF. Very, very nice uptrend. You need to, since it's zigzagging higher, you need to buy it as it kind of zags that way. GDX, this video game ETF, which I think probably is very overweight GameStop. Right, you can kind of see them right here, but let me actually look at GameStop real quick. Yeah, I mean, it's really consolidating. So, I mean, if you look at this, that looks pretty good right there, right? Because it has been consolidating since February, and it clearly broke above 72. Maybe it needs to pull back a little bit, but but this looks pretty good if you like the video game market. I haven't looked at all the stocks in this ETF to see what else is making it move, but that honestly looks pretty good right there. You can see you have more silver miners, more China. We already talked about that. I talked about this a couple weeks ago as it was breaking out, and it broke out. It tested the zone and kind of it's in an uptrend, and now it's extended. So I hope you bought it. Let's look at uranium. You know, this one has really. It has a little resistance right around the 100 level, but to me this is a bullish pattern. You have a cup with handle pattern, broke out a little bit, pulled back. I think it's up pre-market. If it really breaks out again, you could buy it with just a stop loss under Wednesday's low, right? A very, very tight stop. See if this just absolutely takes off. So that looks pretty good. So right now, honestly, so let me kind of tell you my thought process a little bit. When we get deeper into a rally, when the rally has already been running for a month, it's a little bit more mature. I tend to, at that point in time, I tend to really try to swing the bat at much more aggressive industries. And the reason why that is because when I make a trade, I want it to hit my target one very, very quickly. Okay? And if you feel like you're deeper into a rally, you don't have, time is not on your side because you don't know when that rally is going to end for a deeper pullback. So if I feel like time is not on my side, I am swinging the bat for much more aggressive stuff that can hit my target one where I can sell half and raise stop to break even and have a free trade. So that's usually my logic. I am combing the market for the fastest movers. There's always a flip side. The fastest movers are more volatile, can whipsaw you around, but you know, that's the risk we take.